Give us 30 minutes each week to discover the trends that are shaping the future of retirement with That Annuity Show. We bring you conversations with industry leaders who are revolutionizing financial products, technology, and distribution channels. Now, here's your host, Paul Tyler.
So hi, this is Paul Tyler with another episode of That Annuity Show. Actually recording in a new studio here at Zinnia's headquarters in Greenwich, Connecticut. And I think we've got a great inaugural guest in our new location.
It's a beautiful studio.
Mr. Roger Kahlon, welcome.
Thank you, Paul. Thank you.
Yeah, and in spirit of Joe Rogan, can you go a little closer to the mic?
Sure.
All right.
There's some nice gear you have here.
It is. Listen, it's we're moving on up here, and I think we're going to have some very interesting content coming here, and I think this is going to be a really good discussion. Both you and I were at the IRI Annual Conference just a couple of weeks ago. It feels like it was yesterday, but it wasn't.
Beautiful Tampa.
Yeah.
Beautiful Tampa.
Yeah. So for those people who don't know, IRI probably the most influential organization to be at if you are selling annuities through banks, broker-dealers, wealth management firms. What do you think? Is that a good description of IRI?
Well, it's right up there, right up there with LIMRA. I would say those two conferences on an annual basis are where carriers and distributors in life and annuity space need to be.
Right. And I remember it was NABA. Everyone was going off to NABA. Real interesting backstory. We had Catherine Dees on here a couple of weeks ago, talking about her Digital First initiative. I really didn't talk about the transformation of that organization, but that was also always a place to be if you're in the VA space. And I think 2007, 2008 came along, and I think they did a really sort of big rebrand, repurpose.
Yeah, so that's now Accord, right?
Well, no. NABA turned into IRI.
Oh, okay.
Yeah.
I thought it turned into Accord.
No. Yeah, Accord, another really, really good institution. I caught up with some people there from Accord. But I think they kind of changed the focus of the organization and, very interesting. I mean, they were really the cutting edge of, I would say, from an organizational perspective, doing a lot of things that we're doing as a company. I think trying to create a more digitally friendly experience for agents. And you've been in your group, have been involved with this for a while. Maybe just talk about what do you do at Zinnia and, why were you there?
Yeah, thanks, Paul. So, I'm responsible for consulting, the consulting division within Zinnia. And we work on behalf of customers as agents of the client to help them through a transformation, right? Because of the deep experience my team has, most of our consultants have worked in the industry, in business, have walked a mile in our clients' shoes, have been involved in e-commerce, e-business transformations, while working at a carrier or distributor in the life and annuity space. So we're very well positioned to help customers as they start their transformation journey, and to help them provide them support all the way through it.
Yeah.
And so, IRI specific, and the reason I was at IRI is there's a tremendous amount of thought leadership, in the form of the sessions that is offered there, and this year didn't disappoint, right? And then there's also, another reason for us to be there was to make sure that we had a good finger on the pulse of the Digital First initiative that the IRI has embarked upon.
Yeah. Now for listeners who are interested about this topic but haven't don't know what it is, I would just say after you listen to this episode, go back to one I think 4 or 5 episodes back with Catherine Dees, and I had a great conversation with her about where they're headed. But let's jump ahead and just talk about themes that we heard there. I've got my list.
And listen, just for a little bit of context, Catherine is she's got a very big responsibility.
Yes,
right, on her shoulders, and which is to really help the industry drive forward those standards that will help move annuities and life, but primarily annuities, further up and earlier in the value chain.
Yes.
Right, and that is so important, and I think that dovetails nicely into our conversation today. Specifically, there was a lot of information, a lot of sessions around the Digital First initiative. Catherine's been canvassing industry participants and stakeholders, both carriers, distributors, service providers like Zinnia, consulting firms like Zinnia Consulting, in the hopes of establishing a roadmap.
Yeah. Well, okay. Let's stick with that first trend, which was the imperative to go digital. Now, here are my notes. Comment: true, false, disagree.
Did you write them yourself, Paul? That's a fundamental.
What do you think the answer is, Roger?
I know you didn't write them yourself.
Well, okay. The one thing I heard, or we heard, with my my AI friends, was that going digital first wasn't just about improving, customer satisfaction, customer experience. It was essential for growth. I don't know, true, false?
No, true.
Yeah.
And listen, there's a lot of work that's been done. There's a lot more work that needs to get done. And I think that we're now, the IRI is now at the hard work stage. And I would say we're probably only 5%. They're probably only 5% into this entire transformation, because getting all the carriers and distributors and stakeholders, whether it's service providers, and then in this, the platforms that haven't really been part of our industry, the wealth management platforms on board. There's a lot of work to be done there, and I think what was really important at this IRI session, when they're talking about digital first, it was really now about, okay, what is the engagement model? How do we get stakeholders really engaged? We've canvassed opinions and thoughts. We've had maybe some proof of concepts from certain service providers, but really that has been more informal. But now there's, getting to a point of introducing more formality around it, right? And what I saw in the non-technical sessions, which really reaffirms what the question you just asked me, which kind of supports that, is there was a tremendous amount of information about innovative new products, or old products that are being dusted off because they're more relevant now. Right, and specifically, CDAs or contingent deferred annuities and insurance overlays. There were several sessions, and those came up several times. Now, those will sit on top of managed accounts.
I think this could be. I think this is one of these sleeper products.
Yeah.
We've had a number of guests. Ramsey, Smith's got a whole business. He's one of our other co-host who's not on the show right now, but he's built a whole consulting business model around helping carriers think through that. But we've had a number of guests talk about it, but it feels like the time is now. CDAs, right? They've been around, but this is the first time I've heard this much discussion. I mean, are we at a tipping point, Roger?
It feels like we are. The clients we work with, we've obviously you heard the announcement from Prudential with their collaboration with FedEx. And I can't remember the asset manager that they're working with. But that was a recent announcement. They're launching their insurance overlay. I've spoken to several of the carriers who aren't ready yet to make any kind of announcement, but have been working and are investigating how their platforms would be able to support an insurance overlay. But again, it's going to be sitting on top of a managed account, which means it needs to somehow also get into the wealth management platforms, which is, if you look at it, that's dependent in many ways, on some of the digital first work that the IRI is doing.
Well, yeah, everybody's got to have an API.
Mm-hmm.
I think because suddenly these carriers have got to extend their infrastructure to a number of other parties that they probably haven't done to this point. 401k TPA providers.
Right. Well, I think it's even more fundamental than that. It's like, how do you describe an annuity product in a very standard way, right down to the riders and features.
Yeah.
Right, which isn't the case today. Some people would argue we've already standardized annuities, but how that standard is applied is almost dependent between company to company.
Yeah, it's interesting. I think I think another big trend you've kind of touched on it is the whole need to collaborate in order to expand the marketplace.
Yes. Yeah. And when you say collaborate within the industry or collaborate with the wealth management industry?
Well, yes and yes. I think internally, 1035 exchanges are probably one of the most problematic transactions to process.
Mm-hmm.
They're timely. They take a lot of time. They eat up a lot of operational.
And sometimes intentionally.
Intentionally, yeah. It's almost like an intentional process that is an immediate client dissatisfier.
Yep.
Like, how do you get into the wealth management market if suddenly people are used to trades clearing in a day? Now you're saying this trade can't really clear for 30 days, and that's where we're giving ourselves some applause for. I'll hit the applause button.
I thought it was for me.
Yeah. on this, and I heard. I can't imagine up until now actually hearing about a 1035 exchange clearing in a day.
Oh yeah. So there's so this is where the DTCC has provided a mechanism that hasn't really had a tremendous amount of uptake until now. And I know that several carriers have gone live with carrier-to-carrier replacements.
Right, which is a huge step. And I think this is one where, for a number of reasons, the industry has been very slow in handling these processes, but you can't grow the market.
Yeah, and I think there's also been a recognition that the amount of money you're potentially going to retain by dragging your feet is insignificant to the reputational damage that you do.
Right.
And you're, and to the point that you made, you're not going to get financial advisors excited about annuities if they're hard to move from one place to another, if they're not fungible.
No.
Right?
No, and I think we talked about this just a little bit yesterday, but I think it also I think the CDAs fit a little better with the business models of the asset managers.
They do. Certainly it allows a money manager to be able to maintain their fee structure without so if it's a managed account arrangement and they can continue to charge within that. No special, nothing special that they have to do in terms of fiddling with fees. So that makes it easier as well. It also means that they're not having to liquidate a portfolio in order to move it into an annuity. They get the benefits of an annuity while maintaining the investments that they want to put their clients in. And this is where another theme, Paul, that I saw, and hopefully I hope you don't mind me introducing this here, is as we think about longevity versus retirement, that was a real emphasis that I saw this year. Let's talk about longevity. Have we done such a good job of planning for longevity? Most advisors haven't thought about LTC in terms of their clients' plan, right? We're seeing more and more that maybe we should have, and what that leads us into is the evolution of the advisor.
Well, you're absolutely right, and I think this is the external partnership where insurance companies have to partner in a way that with some of the other institutions in a way that introducing lifetime income doesn't feel like we're moving money from one balance sheet to another. We're actually creating a more integrated solution where everybody wins, starting with the client.
Right. And that's right. Everybody has to win, ultimately ensuring that we reduce the anxiety, right, for the client. Because ultimately that's what it is. It's anxiety, it's uncertainty. am I going to run out of my money during my retirement because I live so long? Everybody wants to live long, but will they have the money to do so? They kind of these new products kind of eliminate that uncertainty.
Well, and your group, just to give a little more, precision in terms of what you do, a lot of what your consulting group does is help accelerate time to market for companies launching new products in existing channels or launching new products in new channels. So
right.
you've had a lot of experience making sure that when the switch goes on, the machine actually works.
It doesn't go.
Yeah. What type of questions do you think insurance carriers have to start being able to answer for a wealth management market where they may not be doing it today or they need to be doing a lot better? Is it better explaining lifetime income benefits? I mean, what part's missing?
Well, I think really understanding what is it that is causing an advisor to not consider an annuity, right, as part of the portfolio. Is it that they don't understand it? Maybe it's a combination of things, Paul, right? It could be education. It could be maybe simplification of products, right? Do the platforms that the advisors are using, can they accommodate these products? And I think that last piece isn't entirely a technology question. It's more of a product implementation question. We've all worked at places where systems were designed for one type of product, and you get this new innovative product, and the operations people are always trying to figure out how can we accommodate this product on our existing systems. I think that's something that's happening now as we look at making these products more available upstream. And the data standardization, I think this comes back to some of the work that the IRI is doing in terms of being able to model these products further earlier in the value chain.
Yeah, and you may or may not be able to answer this, but we at least talk about it. Secure Act, I don't know if it's Secure Act 1 or Secure Act 2 said, and I think it was it's like time goes fast. It was either 2003 or 2023 or 2024. If you were 401k provider, you had to provide an income statement. Like what would happen if Paul Tyler retires at this point and has to convert his 401k balance into an income, or if he continues to put money until he's 65, how much will he be able to earn? And everybody put the numbers up, but it wasn't too standard, or if people put sort of what was expected to be sort of the standard way of displaying lifetime income option or stream of money, they may have two. They might have had the one that was sort of standard, the one they wanted people to look at. How close do you think we are as an industry to saying, here's the way to show it? Because there's a lot of assumptions that go into what that income stream might look like, even from an annuity with a guaranteed income. What age? What's the performance? What's the, if it's an FIA, what was credited? If it was a VA, how did the market move? If it's a RILA, it's complicated.
Mm-hmm. It is, yeah.
Now, is that are those part of the discussions you've heard at IRI, or do you have any sense of where that fits?
I didn't really hear too much of that, because I think we're still kind of at fundamentals, right? In terms of the opportunity is quite large if we can kind of get over the initial hurdles, right? But I think that how they're represented, how the value proposition is represented, and scenarios are represented, that's going to become very important, right? And we've seen, just on the Zinnia platform, for instance, using illustration or kind of scenario information, representing that in something that's much more user friendly. Advisors love it. We had, I think Zinnia had some functionality that did that, and advisors really love it because it makes it easier for them. If they understand it, it makes it easier for them to talk to their clients about it and the benefits of one product versus another.
Yeah, well, here's the problem: knowing too much. I see far too many complications there. My sort of question is like, okay, if you're going to project forward and make assumptions about how the income or the annuity may perform. Well, now that's suddenly under insurance rules turning into an illustration.
Mm-hmm.
So are the states going to have to, review this?
Yeah, and listen, if they have to review it and say this is a standard illustration, that's great, right? That's fine.
Yeah.
If we have to do it, and I think it's kind of one of those things that we have to recognize that we have constraints within which we work, and regulation is one of those things. So once we accept that, then we devise plans and transformations and solutions that kind of factor that constraint into place. But I think what I've seen is taking that illustration data and representing it legally one way, but then also for the advisor and the end customer in a way that's just far more flexible, far more intuitive, and devising some commentary, some natural language commentary to go along with it. That's what we've seen. What we've seen at Zinnia in terms of that capability and the way it's received by advisors. It was they really liked it.
Oh, I'm sure. It's they're tricky laws though, really. And when does compliance? What will compliance sign off on?
Oh, yeah.
What the
and this is where the other piece that I think that many carriers struggle with is interpretation of regulation. It varies from firm to firms ever so slightly, and you build compliance on top of that. That means there's really not a tremendous amount of standard for compliance.
Yeah,
one organization to another.
Right. Well, let me pop up a couple other notes. Tell me what you think. Okay, impressive or not impressive? Generative AI adoption surged from 0% to 40% in 1 year.
In the industry or across the board?
That was on the industry. That was a survey they did.
I missed that one. That is impressive.
See, I say no.
Because it's not high enough, or?
Yeah, who's not using ChatGPT? Who's not using Claude? That tells me.
Yeah.
I think we're still in the early days of this game.
Without doubt, but if you look at it, say, how many years have we been into this? Like 3, maybe, with generative AI? 3 years?
3? For
an industry that's still struggling with data standardization and automation, and how do we be paperless? Right?
No?
Right? So 40% for an industry, that type of industry is, I think, pretty impressive.
I think we're looking at two sides of the same coin, right?
Is the glass half full or half empty, Paul?
Yeah. So it was a lot of talk. I think I will tell you a monumental difference at that event than what I've saw at similar events over the last, even 2 years ago.
Well, as I recall, this was the largest attendance they've had.
Yeah,
I think it was some of the. I think the number was 800 attendees.
Right.
So it was, and I could feel definite energy. Almost like a renewal of sorts.
Right.
And I felt the topics were much more interesting than I've seen in the past. And they really, the business themes and the technology themes really felt like they overlapped nicely.
Yeah. Okay, a couple more for you. To your point, we're a conservative industry. Why? Because there's a lot of money at stake, and it's important stuff. You got to get it right. Easy, very easy to blow things up.
And regulation, right?
Yeah, and regulation. So my notes say industry faces a Netflix moment. Full transformation required. We're all about pilots. Are we really ready to go all in to digitization here in this industry?
I think there's a fear, right? And fear is a great driver, but there's a fear that somebody else is going to come. If we don't do it, somebody else is going to come from outside the industry and do it for us, like Amazon, right?
Yeah.
I think that's the example that gets bounced around a lot. Is what if Amazon came in and did this? Could they? I don't think it would be that simple because of the complexity of the products and the regulation, but that fear is always there, and I think that's really driving some of the initiatives that we're seeing now. I talked to some of my colleagues, people on my team that have been in the industry for 30 years, 25, years, long time. And this carrier-to-carrier replacement that recently went live, for them, they're like, this is the first innovative thing, really, really, industry-moving thing that's happened in the past 15 years.
I agree.
Right?
I agree. I would say EAP adoption.
Right.
Has been that's game changing. This is the next one.
Yeah, and so maybe we're starting to get into another spurt of innovation, right? Because it feels like in this industry, innovation happens in real almost discrete spurts, and maybe we're getting to that next spurt. Now the question becomes, how long can we sustain this particular innovative phase that we're entering into?
Right. Okay, you said a word I'm going to come back to, trigger word, fear.
Oh.
Fear. No, not that one. Fear. Okay, I would say your group takes the fear out of a lot of transformations. How do you do it? What's the secret sauce?
Yeah, listen, that's a great question. Thank you. It's about recognizing that there are going to be challenges. And earlier on I said we have to recognize that we work within a highly regulated industry, right? Once you recognize what can change, where the variability is, then it reduces anxiety. And all of a sudden you start planning in for that variability. And we do this because we've seen a lot of that variability because many people on my team, including myself, have been through numerous transformations, right, in this industry or others. And we've seen that variability. We also understand how to manage when we get to that variability. What kind of preparation can we do? Recognizing that variability is going to happen, what preparation can we do today to ensure that we minimize the impact of that variability down the road, right? Knowing, so as you move into a transformation, doing some of that fundamental work of establishing the philosophy, the guiding principles, getting it down on paper, vital. Understanding when that variability happens, where can I flex? Having those types of understandings up front ensures that we'll be prepared for that variability when it occurs, and it will.
Yeah. I'm nodding because I've seen this happen.
Yeah.
Oh, MIGA's great example. Okay, here's the market. We're going to put our rate here. And hey, it's, this will be competitive, but we'll get a nice steady flow. Oh, whoops, everybody else lowered their rates. Boom, the flood comes in, blows up your operations. You've got good news, piles and piles of checks. The bad news is you don't have anybody to process the regular stuff. It's interesting. Well, let me ask you, we got time for one other question for you. And this was an interesting turning point for me to listen to. Usually I go to these events and they say, I'd love to do the transformation, but we don't have a budget. We need to make the ROI.
Yeah.
Now, people actually did a survey on the screen, and it was really interesting. So what's the main hurdle to doing this stuff? Budget wasn't even a factor, but it was prioritization. Wait a second. So you have the money, but you don't know what to do with it. Now, Roger, sometimes having choice is harder than no choice.
Yeah.
Any kind of words of advice to somebody who says, okay, I got to do this big project. I know what I want, but I can't figure out the order to do it. Yeah,
and that's debilitating, right? You've got so much choice. Where do I start? Right?
Yes.
They're paralyzed by that first step. Now, I think that's really important point to find a partner that you trust, and a partner that has the experience to take you through that journey. They're not going to necessarily lead you all the way. They may lead, but they need to support, right? And having that experience and that trust and that ability to speak candidly is an important thing in terms of finding that partner. And finding a partner is important because they're going to help you avoid the dead ends that waste time, that waste money, that waste resources, and energy, because sometimes these transformations can be lengthy and people get tired, right?
Yeah.
So finding that partner that is has been through it before and you can speak candidly to is I think vital.
Roger, this was great.
Thanks, Paul. Thanks for having me on.
Yeah.
Really appreciate it.
No. If people want to continue the conversation, or they're looking to get some sage advice on what their plan should be for 2025, how do they reach out?
Sage as in the herb?
No, sage as in the Roger, the Roger sage. What's the best way to find you?
Yeah, you can email me.
Okay.
Roger, Roger.Kahlon, Kahlon @Zinnia.com.
Okay, excellent. Well, listen, thanks. We got to have you back.
Okay. Well, listen, it was great talking to you. I really appreciate it.
Yeah. Well, hey, listen, want to also thank our listeners. Hope you enjoyed the show. Give us questions, feedback as usual, and but most importantly, come back next time for another great episode of That Annuity Show. Thanks.
Nassau Financial Group is always working harder to be your carrier of choice. We build products that help protect people's savings and are dedicated to providing you with best-in-class service. We seek to keep things simple and have your back in the years to come. Nassau is headquartered in Hartford, Connecticut. Learn more at nfg.com.
Zinnia, an Eldridge Industries business, simplifies insurance. It delivers comprehensive solutions for the industry's most critical needs and creates the modern rails of the insurance industry. To learn more about Zinnia, please visit zinnia.com.